All right, let's have a conversation about economics here. One of the stories that Donald Trump has been telling us is that the economy would be way better off if the Federal Reserve would sort of help him out with a federal funds rate decrease, the way that they've helped previous presidents. And Donald Trump has been talking about this for several years. Now, the truth is that both increases and decreases to the federal funds rate can help out a president in different ways. Because the logic is that when you cut the federal funds rate, it makes it cheaper for banks to borrow money, which stimulates economic activity, which will then boost the stock market. But it also increasingly signals when you do an increase, I guess is what I'm trying to say, it signals that the Fed sees the economy as strong enough to tolerate an increase, which can also be liked by traders. So there are some economic reasons why it is said, or at least historically has been said, that decreases to the federal funds rate stimulate certain types of economic spending. But at the same time, increases in the federal funds rate are meant to signal strength by the Fed in their opinion of the economy, which can get people also buying up stocks and running up the price of the stock market. So the point is, either way, there is a mechanism for which a federal funds rate move can help the economy in the sort of superficial ways that presidents pay attention to. So in any case, Donald Trump finally got himself a federal funds rate decrease on August 1st, and stocks crashed. Looking at the Dow Jones, you'll see that upon the Fed's announcement of the rate cut, stocks were down about 3%. At the time of this filming today, intraday, the Dow is down almost 600 additional points. And there are three things that I want to talk about here. Trump's response to this, rate cuts more generally as mechanisms for influencing the economy, and then what is really the most important thing here, which is Donald Trump's tariffs. So let's start with the first issue. Donald Trump, after begging for rate cuts and getting one, and it not boosting stocks, and in fact coinciding with a decrease, came out and said, well, okay, the reason that this rate cut didn't work the way I expected was while the Fed did do a rate cut, they didn't do a bigger rate cut, which is what I really wanted. And they also didn't pair the rate cut with a statement that they're going to continue doing further cuts. So they're just not sending a clear enough signal about how great the economy is and is going to be. So we don't really need to talk much more about that. It's Trump logic, which is also known as anti-logic. I mean, it truly makes no sense whatsoever. And it is one of these things of Donald Trump post facto coming up with rationalizations that nothing beyond a 5-year-old or a hyper-partisan Republican would fall for. So then we get to, more generally, do rate cuts actually stimulate the economy? And there's a really interesting article in the New York Times, which says that lately, no, rate cuts don't really help anymore in the modern economy. The normal sort of mechanism is you cut the federal funds rate, and this will lead to Americans buying more durable goods like cars and such. It will drop interest rates on mortgages. So people will start refinancing their homes. They will lower their payments and have more money freed up to spend on other stuff. So it's great for the economy in that way. There are some other mechanisms, but for the consumer-facing analysis, that's the primary analysis. But there's a different modern economy now that we're in. The reality is the modern economy doesn't really work this way. People don't just save, 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 and then when there's a rate cut, go out and do a ton of spending. Spending has a much more sort of natural cycle. And then in addition to that, remember, the bottom 50% of the economy has stagnant wages. They've had stagnant wages for decades. They just can't afford to do much more buying because the Fed funds rate went down 25 basis points. So primarily, it is a method that ties into big finance and the run up of stock markets, which again only benefit a certain portion of the economy. Low rates won't do much if people don't have money. So the long and short of it is that even this reliance on rate cuts to jumpstart economies or to prevent recessions, that's old economic thinking. And of course, it's based on an economic status quo that was never good for most people anyway, of indefinite growth as the goal and such a sort of divergence between the benefits to the top 1% and 10% and 50% and almost nothing for the bottom 50%. So that's a bigger conversation to be had. But then here's the real elephant in the room, completely missing from Trump getting his rate cut and stocks crashing, Trump furious that a 25 basis point rate cut didn't jumpstart the stock market, Consider that the same day that the the funds rate was cut, Trump announced even more destructive tariffs, which are terrible for the United States. Take a look at this. Trump on Twitter, our representatives have just returned from China, where they had constructive talks having to do with the future trade deal. We thought we had a deal with China 3 months ago, but sadly, China decided to renegotiate the deal prior to signing. More recently, China agreed to buy agricultural products from the U.S. in large quantities, but did not do so. Additionally, my friend President Xi said that he would stop the sale of fentanyl to the United States. This never happened, and Americans continue to die. Trade talks are continuing, and during the talks, the U.S. will start on September 1st, putting a small additional tariff of 10% on the remaining $300 billion of goods and products coming from China into our country. This does not include the $250 billion already tariffed at 25%. So the entire conversation all along, Trump so reliant on the federal funds rate, which increasingly does not generate the economic reaction that it once used to or was believed to. Trump talking about the rate decrease wasn't big enough. The messaging from the Fed wasn't strong enough about how great the economy is and that there will be subsequent rate cuts. That entire discussion was a farce. Trump wanted a rate cut and he got it, and stocks crashed. Well, the problem is not that the cut wasn't big enough. The New York Times explains the rate cuts in general are less connected to immediate stock market gains, but nowhere in that entire back and forth is the reality that the same day that Trump announced more tariffs that are terrible for American companies and Americans at large, the stock market started to crash and is down as of right now. Might be different by the time it closes. We're filming before the close of the stock market today. The Dow is down an additional nearly 600 points. As usual, Donald Trump's propagandizing combined with a just very poor understanding of basic economics and the totally missing story of the tariffs ends up with completely wrong headlines related to what's happening in our economy. And of course, people fall for it and they say, yes, the problem is what Trump says. The problem is not stagnant wages for 40 years. It's that liberal, lefty biased Federal Reserve that just won't give Donald Trump a bigger rate cut. Trump is the victim, as usual. One of the things that Trump has in common with many other authoritarians, regularly framing himself as the victim. I will be talking much more about this, actually. Wednesday evening, I will be having a live stream on Twitch at 6:30 p.m. Eastern time. We will be talking about this and many other economic issues. Follow me there, twitch.tv/David Pakman, and join me Wednesday evening, 6:30 p.m. Eastern.